Hey everyone, Justin Holland here for the Mad Insurance Show, making a difference in insurance. We're so glad you joined us this week. We had a great show last week, and I might even bring up a few items that we had discussed on last week's show as well. But thank you for joining us today. As always, you're probably listening to us here on KTSA 550 while you're running around town here in San Antonio or South Texas. So hopefully you'll get some good value out of today's show. Or you might be watching this video on our YouTube channel. And remember, go to our YouTube channel, like and subscribe. We're actually going to start adding some video shorts and snippets from the show and past shows as well. But you can go to our YouTube channel at youtube.com/at Mad Insurance Show. Take a look at us there online just in case you're wanting to see other topics and what we've brought up in prior weeks and months on the show now that we have it. So, what is the Mad Insurance Show? Just a little details on what we do here on the show. We basically talk about everything insurance. And sometimes we go a little out of the scope of insurance as well, whether it be with a guest or other items that basically are tied or related to the industry of insurance. But we will talk about auto insurance, homeowners insurance, commercial lines. We'll talk about life insurance. We've been talking heavily about health insurance and employee benefits because that's been big in the news right now. And there's been some serious disruptions regarding that segment of the industry. So, the reason we've got this show is just to provide some value, bring up articles that are probably overlooked by most individuals. And I've got some good stuff that we'll bring up here and talk about in the show. Basically, some of the items that we're going to talk about is going to be health insurance reform, retirement income and science, prior authorization controversies. I'm sure everybody's gone through that. Group health insurance or group plan strategies for employee benefits, umbrella policy gaps, Social Security insurance versus Social Security disability. And then I'm going to wrap up with something that I wanted to talk about last week, and that's Medicare planning for those in the military. So hopefully we'll be able to knock out every topic. I kind of ran out of time on last week's show, and we'll get this kicked off in just a minute. I wanted to bring up some brand identification for us as well. So, me being Justin Holland, it's not just about the Mad Insurance Show. We've obviously got agencies here in town that can help you out with health insurance, with auto and home insurance, and all the other products. Well, I've got two agencies that help out with that. If you're needing help with individual health insurance, Medicare plans for seniors, if you're needing employee benefits or wanting to look at employee benefits for your small, medium, or large size business, that's going to be through Texas State Insurance Services, and we can help you out with all those items. And we do a pretty good job of being able to take care of initial quotes and basically manage the benefits for the employers or just your individual Medicare and family coverage. The best number to reach us at is going to be 210-880-5316, or you can visit palmettolifegroup.com. And with Palmetto Life Group, that phone number is 877-357-5316. And Palmetto Life Group is going to help out more with the auto and home insurance, life insurance, Social Security analysis, and it has how it relates to retirement. And then we've got the auto, home, and commercial lines, as well as umbrella. So we've got two separate agencies that handle all dynamics of the insurance business. And if for some reason I brought up something that resonates and you want to reach out to us, just give us a call or look us up online, complete our contact form, and we're going to reach out to you as soon as we get the message. And we do a pretty good job of trying to get back to people that reach out to us within 24 hours. And that's even through the weekend. So we try to be as proactive as we can on that. But as far as the initial segment that I want to bring up here on today's show, it's a big policy debate on whether to end the health insurance tax exclusion. And I'm going to bring up some items on this because this is important. This is something that's been around for a while. And when I was really involved in the legislation part of the industry, this was one of the key bullet points because there's a lot of money that can, or a windfall of money that could be coming towards regarding the the tax coffers, so to speak, on what's excluded for employers and what they offer the benefits to their employees. So one of the things that I wanted to bring up was a Washington Post opinion piece that I came across. It was dated April 27th, 2026. And that's actually the day that I'm recording the show. I'm recording the show earlier in the week than I typically am. And what they bring up in this article is the opinion piece is generating real buzz on policy circles as far as it relates to employee benefits, specifically health insurance. And we want to break it down for all of our listeners here on the show or that are watching us here online. So, what is employer health tax exclusion? A century-old provision that lets employers deduct health insurance premiums and employees receive those benefits tax-free. Okay? And critics argue it's one of the most expensive and regressive tax breaks in the tax code, effectively subsidizing gold plated plans for higher earners. I don't know if that's the case now. It could have been in years prior, but the case for that ending or capping it could generate hundreds of billions of dollars in revenue. It could level the playing field between employer based and individual coverage, could encourage consumerism, is basically what they're calling it. The case against it is millions of Americans depend on employer sponsored health insurance benefits and the primary and as their primary and most affordable path to coverage. I would agree with that. Disrupting the system without replacement could leave people exposed. So if they take this tax exclusion away regarding employer sponsored benefits, definitely you're going to have millions of people that are going to be affected. And I want to say it was like 60 million people are insured. It could be more than that. I got to double check the stat on their employer sponsored health insurance plan. But this is a conversation that we need to make sure we get out there. Um, most Americans, most individuals need health insurance. Okay, and it just comes down to cost in most cases, and especially if you get a lower tier health insurance plan, sometimes that's all you need. You just need something for that catastrophic scenario. And something's popping up in my head right now on an article that I saw over the weekend. I'll have that for next week's show, but, basically, they were, his argument on this video that I saw was that we need to eliminate employee benefits and that health insurance and just go, straight to consumer, on the health insurance dynamic. I'll pull that up and we'll have some details on that for the following show. But what this means for small business owners and their employees, it means they're going to have to really get dialed in on their personal tax planning if they've been taking advantage of those pre-tax dollars for their own benefits. And that could be a major issue that we see come up regarding health insurance reform, and especially if they take away this tax exclusion that millions and millions of people are benefiting from and taking advantage of regarding their employee benefits that they have in place. Before I dive into another segment that I'd put up, I was with some family over the weekend, and my nephew's girlfriend was talking about health insurance needs, and she's actually a student here at UTSA Medical, and she's like, "Hey, I've been wanting to ask you, Justin, about maybe finding me some affordable health insurance because in most college campuses you need to have health insurance in place, is as long as you're going to school there, and they have this litany of options and exclusions and waivers that they'll accept and won't accept if you don't have any insurance. And I want to go. It got me thinking. She's going to get me the rates, and we're going to do a comparison. But she said she's probably paying about $400 a month for her health insurance, and she's a student. Okay, that is not cheap. That's not a really an affordable option for a 20-year-old that's going to school. And I said, you know what? There's some options out there that we could probably take a look at. And I mean, at a quick glance, I looked at it on our quoting portal, and she's at $400. We've, as a student, and which is expensive, We found some options starting at about $125. Now, granted, you're not really going to get the copays, but you'll get your annual wellness visits covered underneath that. You're going to have your what do you call it? Your catastrophic, accident or illness coverage within that plan, and that's probably all that most students need for that. And $125 a month is going to be much more affordable than 400 plus dollars a month, especially for students. And if you got multiple students going to school, that can add up quickly. And we've got a pretty slick option to be able to offer you more affordable coverage. So, and specifically in this discussion or segment that I'm talking about, we're talking about college students, and I think that this option that we have is something that came out and we kicked off January 1. Actually, it's new. It's not Affordable Care Act coverage because a lot of times the Affordable Care Act plans, the college student needs to earn some type of income, a minimum of 15,500 to qualify for a lower cost plan. Or they're on their parents' Affordable Care Act plan and their parents collectively are still claiming them as a dependent and they're able to get those premiums much lower off of that as well. But, just planting that seed out there with our audience. If you've got a student and they need some affordable health coverage options and, to counter whatever health insurance they might be paying for now, let us know, and we'd love to help you out. The number for Texas State Insurance again is 210-880-5316, or you can visit us online at txstateinsurance.com. Before I wrap up the visit regarding the student coverage, I wanted to see, what doesn't meet the standards for the local school year. Health coverage this is a segment more for international students, but it's still going to apply not just to the foreign students here in town, but the domestic students as well. And such a plan, if you're looking at saying, "Hey, I've already got health insurance or coverage in place," they've got, it has to meet minimal essential benefits required by the PPACA, um, no annual limits, contains no exclusions for pre-existing conditions, covers 100% preventative care as a defined PPACA plan, imposes deductible that does not exceed um, $500 per accident or illness, imposes no provisions for coinsurance that exceed 25%, in the if it is underwritten by an insurance carrier that meets the requirement of 22 CFR 62.12 D1, or offered underwritten by federal qualified HMO and competitive plans. What they're detailing right now, as I'm breaking this article down, because I'm really taking a look at this as I'm recording the show today, because this is something that came up or landed in my lap over the weekend. um, that could keep you from getting some health coverage options that would, in fact, be more affordable. I think they need to be more lenient on that. Plans that do not meet the health coverage requirement of this policy, or as far as the policy for the school district or this university, I'm sorry, short-term medical, limited duration plans, other health plans created expressly for the purpose of providing coverage to international students and non-immigrant visa holders. So maybe this is just something that applies to the international students. I need to double check on that. But the bottom line is you need to look at options. You need to shop options for your children, or students that are maybe listening to the show right now or watching this video. We've got some affordable health coverage options that might cost less than what you're having to spend to meet the university's guidelines of having, insurance in place. And I mean, over the weekend, 20-year-old $400. I thought that was pretty high per semester, and we've got some solutions for you on that. So that was a little detour I took regarding something that happened over the weekend regarding coverage for students. Now let's talk about another segment that I put together. And what this is why can't Americans buy more health coverage or more affordable health coverage? And this is a City Journal Manhattan Institute article that actually just hit today as well that I found early this morning. And policy analysts of the Manhattan Institute are asking a sharp question. Why can't Americans buy basic, stripped down health plans? So a so-called you go health insurance plan. Not sure what that is. The ACA mandated a Cadillac of minimum coverage, essential health benefits, actuarial value floors, community rating, and guaranteed issue. That's a fact. That's what the ACA, the Affordable Care Act, Obamacare, that's what that mandated. The original vision of Obama's team, we're taking a glance at the past right now, was a basic, inexpensive plan both outside stakeholders pushed for with comprehensive coverage mandates. I'm not sure if we've hit that or not. The result, the lowest ACA compliant plan still costs far more per month than a families feel they can afford, especially if they're just over the subsidy cliff. Now, remember, a lot of shows I've been bringing up the subsidy cliff. Health insurance subsidies were expanded and increased prior to January 1 of this year, and those were eliminated at the end of last year. And that helped a lot of people out get some type of relief. The individuals that were already meeting those requirements to be able to, or those thresholds to qualify for affordable coverage and get a subsidy and tax credit per month. And it also helped, before it was gone, that middle class segment that just it was out of reach, period. And it finally allowed people to have affordable options for their family members. And I keep on stressing this on every show. I hope they bring that back. I hope they realize that they need to create a special enrollment period for some reason this year, like they're doing over in Hawaii. That was a article I brought up on last week's show, and give individuals the opportunity to get back on healthcare.gov or get additional assistance that they might have lost. But the result, the ACA compliant costs, actually, I just brought that up. The argument that they're bringing up is this lets households buy plans except from ACA rules, short-term, catastrophic only, to restore a lower tier of coverage. Now, I have heard some rumblings on the street that the Affordable Care Act is going to open up more catastrophic plans, maybe be able to lock in a rate for a longer period of time. I don't know how they're going to do that and regulate that, or at least get the carriers to want to come on board with that. But we could see some significant changes for individual health insurance as it relates to the Affordable Care Act this fall. The counter argument, cheaper plans often mean skimpier coverage, exclusions for pre-existing conditions, and a sicker risk pool for compliant plans. That is correct. You know, I will tell you, you've got that risk factor of, and there used to be risk pools in plans. When I first got into this industry and business, there was like a Texas risk pool, and you were allowing other individuals that might not have applied and gotten denied coverage to be able to get in there if they met some parameters and some thresholds for that coverage. I think we should have maybe two separate risk pools. One plan for people that have chronic or terminal conditions, and then one and plan options for those that are healthy and are skipping along with their life, you know, and don't have any health concerns. I think if we could come up with a happy medium there, that could be something to consider. You know, we got to have some smart people put that together and take a look at the exposure and the underwriting, but maybe that's something to consider. I work with clients every day that are stuck in this gap of either not being able to afford the insurance or just not happy with the coverage that they have in place. And the big thing, you know, the past few months was not qualifying for the subsidies on what they might have had in place already with the Affordable Care Act. And that was a big blow. And that, again, I hope we see some changes with that, but the tension is real. This is personal for millions and millions of Americans right now. And I keep on referencing last week's show, but I had a lot of good stuff to talk about. And we discussed the fact that over 33%, I think, of voters here in the United States are going to be, their priority is going to be health coverage and affordable health care. Okay, not gasoline, not food, although those are very important. But healthcare costs and health insurance costs are going to be top of mind for more than a quarter of the population. And hopefully that resonates with legislatures right now, not, when we come up to an election. Hopefully they'll make some decisions and some adjustments where we can get some immediate relief, because I feel, we're going through a serious crisis for health insurance and health coverage for individuals. Some are in better shape than others. Some meet those guidelines and they're coasting and they're good, but millions and millions of others are unfortunately not. And collectively, this is a real problem for people. So that wraps up, the article on why can't Americans buy more affordable health coverage, and that's some details why, among some other things, and we could go on for hours on that. So I just want to get a reminder for everybody listening to the show. This is the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, and the Mad Insurance Show talks everything insurance. Right now, we've been discussing for the past few minutes articles and some details, even a scenario that I came across over the weekend regarding specifically health insurance. And that has been a key topic for most of our shows that you're listening to here, either online or over the radio. And as always, if you have questions for your health insurance needs, whether it be individual health insurance, Medicare plans for seniors, or employee benefits for small, medium, large companies, you can reach out to us at Texas State Insurance Services. And our website is txstateinsurance.com, or our phone number is 210-880-5316. We'd love to help you out there. And don't forget Palmetto Life Group for all your life insurance needs, long-term care insurance needs, as well as Social Security analysis on how that relates to your retirement. We can help you with a detailed review on that, which is becoming very popular right now, along with auto, home, and commercial lines of insurance business that you might need addressed. We'd love to run some quotes and see what we can do to help you out with that. That phone number for Palmetto Life Group is going to be 877-357-5316, or you can visit us online at palmettolifegroup.com. But just a little station identification for KTSA listeners here on the show that you're listening to, and it's the Mad Insurance Show with Justin Holland. So another segment that I put together was going to be regarding prior authorization. This was another article that I found released early this morning, and I wanted to bring it up. And a former UnitedHealthcare executive speaks out. Obviously, UnitedHealthcare has been in the news lately. This is a Stat News article that we found online, and it basically kicks off. This is a remarkable story. A former executive from one of the nation's largest health insurance companies is now speaking publicly about how prior authorization actually works and the real goals behind it. So this is good. I think we need to address prior authorization because a lot of people complain about it or get disrupted because of it. Let's dive into the bullet points that they put together for us. So prior authorization, a process requiring providers get insurer approval before delivering certain treatments, procedures, and or medications. Okay, that's what prior authorization it really is, or supposed to be. The official justification is ensuring medically necessary and cost-effective care, avoiding waste and inappropriate treatments. I can understand that. You might not need to get a procedure done. I'll give you just one quick example. It's not medical, but it's dental related. I was going to one dentist here locally, and they said I needed to take care of something on my teeth. And I was like, man, I really don't, think I need it right now. And then I went to another dentist that my wife had found for us, and this was just a few weeks ago. And they're like, no, you're okay. I mean, we can help you do it if you want, but it's not critical. And that was just one quick scenario on dental, and it relates to prior authorization where I didn't think I needed it. Sometimes doctors feel that you do, and the insurance companies are just trying to protect from any inappropriate treatments that might not be needed, which is going to higher the exposure and the plan costs for the future, for the carrier, the insureds, and whoever is helping to cover the cost of that insurance or subsidizing maybe through an employer. So let's keep on going on the bullet points. I'm sorry, I lost it here. What is the inside? What is inside? What this insider reveals? The system is designed not just for clinical appropriateness, but a friction mechanism. Delay, deny, and appeal rates are tracked and optimized. Real world impact is what they bring up here as well. Patients with cancer, chronic conditions, and mental health needs have treatment delayed or, in fact, denied while navigating the system that was designed to push back. Okay, I get it. The prior authorization, you're trying to get providers to get insurer approval before delivering certain treatment procedures and medications. They want to make sure, they want to verify that it's needed. But I like how they're wording this in the article on Stat News, is that it is designed to push back. What this means for patients is you need to know your rights. You need to know that you can appeal, prior authorization. I can't tell you how many phone calls we have to do with clients, with themselves and the carrier, just to get a handle, see what's going on with prior authorization. Recently, it hasn't been really on the medical side. It's been on the prescription drug side. It's been a real challenge. We've got individuals and clients that are taking medications that are costing, $4,000, $10,000. I mean, I've seen even $60,000 a month medications, and sometimes you can get these appealed and approved, and a lot of times you cannot. And they want to wear you down. And I think if you've got a good doctor that's in tune with the appeal process, with the prior authorization process, then you're probably going to be okay. But if your doctor is not proactive on that, it could cause some problems or some delays. And I've no doubt seen that for a handful of clients. I've seen clients that have doctors that, hey, we got this. We can push this through. This is the plan you need to get on. This is what we feel can help you with. And then we've got other doctors that are just not prepared, to really get aggressive on the prior authorization or how it relates to an appeal. So what this means for agents and employers, agents and brokers like myself or employers, prior authorization denials affect employee morale, health outcomes, and your group plan preparation, or the actually reputation of the plan as well. And this is worth discussing regarding anybody that's offering employee benefits. And so let's dive into this. Most employees hope that their employer offers a PPO plan, preferred provider organization, to where they don't need the referrals a lot of times or prior authorization. Where you're going to see that is really on the health management organization plans, the HMOs. And you see that on Medicare for seniors. You see that significantly more in the Affordable Care Act plans, although there are some EPO plans out there. E is in Echo, PO, and that's kind of a hybrid between a PPO and an EPO. You still need to select a primary care doctor with an EPO plan, but you don't necessarily need a referral for going to a specialist doctor. Now, I will tell you, a lot of the doctors or primary care doctors still want to provide a referral, even though it might not be needed. So we've been seeing an uptick in that over the years. So don't be surprised, hey, I'm on an EPO plan, I shouldn't need a referral. Well, that your doctor's discretion might try to make sure that you get one and have that sent over to the specialist. But where I'm going with this on this article is some of our groups have to offer an entry-level HMO plan just to get the cost low and aggressive enough to make it affordable, one, for the employer that's helping subsidize the plan, and they've been facing record increases in cost on the health insurance plans that they subsidize for their valued employees. And then two, the employee cost, what their percentage that they're responsible for themselves, and or it could be for their spouse, their children, one or the other, or both. And an HMO plan on an employee benefits plan are pretty strong plans, and most of the time. However, they're going to be more managed. You might need that prior authorization. Although I've seen some hybrid plans, depending on the carrier, where They allow you, hey, as long as they're in network, you don't need authorization or a referral. So that's something to consider. If you've got challenges with that with your current health insurance plan that you're offering for your employees, reach out to me and let me know, and we can do an assessment. There could be some other options out there. That could be a carrier, it could be plan design with the current carrier, or just getting creative with some alternative solutions. And we'd love to help you out with that. Again, the number for Texas State Insurance Services is 210-880-5316. To wrap up this article, it's basically I bulleted out the legislative backdrop. Federal and state efforts to reform or limit prior authorization for Medicare Advantage and commercial plans are gaining momentum. So let's repeat that. Federal and state efforts to reform or limit prior authorization for Medicare Advantage and commercial plans are gaining momentum. I mean, I like the fact that the federal and state agencies are trying to help with that, but at the same time, I totally get the prior authorization and the referral arrangement with plans, specifically the HMOs. They're just trying to keep the costs down low, as much as they can and keep that risk down. Do I think people are gaming it? Yeah, I sure do. But um, that's how complicated the health insurance industry is as it relates to the insurance company, the individual or company or group that's offering that benefit from the insurance company, and in the end, the consumer as well. Also, how that relates to Medicare in the Affordable Care Act, because you might have believe it or not, we've had a mix of families where the one of the employees of a plan still has a spouse that they want to have covered on insurance, and they might have an adult child or a child that they had a little later in age that needs to be covered on their benefits as well. And depending on their income, one scenario that we had the spouse that was employed on we ended up looking at it. It was better for him to go Medicare, okay, and staying on his employer sponsored plan. We got the wife and the 2 children on a Affordable Care Act plan, and they, because of their income and family size and the way it worked out, they qualified for less expensive coverage collectively for the rest of the family. Now, I've also seen scenarios where you've got one spouse that'll stay on the group plan, you got one spouse that'll go Medicare, and then you've got another dependent that might need to go ACA. There's plenty of those scenarios out there, and they can be exhausting and a little overwhelming. Let us know your situation, and we love to help break it down, see if we might have a solution for you if possible. So let's talk about another study that I came across. This is something else on this one. This is a BlackRock study. Guaranteed lifetime income is the number one retirement lever. Okay. Been talking about health insurance a lot on today's show. Now let's talk about lifetime income. This is a BlackRock white paper that I came across this morning online. And if you don't know who BlackRock is, they are the largest asset manager, and they just published a research that validates what many people have been saying for over 35 years. Okay, in this article, BlackRock ran 100,000 simulations to find the single biggest lever for retirement income security. Okay, so let me repeat that. BlackRock, which is the world's largest asset manager, ran 100,000 simulations to find the single biggest lever for retirement income security. Their answer was not higher contributions, not better stock picks, and not even lower fees. The answer is guaranteed lifetime income embedded in a retirement plan increased spending power by an average of 22% and 25% for lower income workers. Okay. Man, I love bringing up these articles and bringing this to the table for our listeners online or on the radio, because this is the world's largest asset manager, being BlackRock. They've got all the tools to be able to play out these scenarios, especially when they own so much of the stock market or share of that. And listen, the fear is real. 66% of savers are afraid they will run out of money. Okay. Only 27% feel confident their savings will last. 66% of savers are afraid they will run out of money, and then 27% feel confident their savings will last. So that is more people feeling they're going to run out. All right. And last week, I brought up the issue of Social Security coming into 2032. And we were seeing where there could be shortfalls of $7,000 in Social Security benefits for individuals. I think it was like 10,000 shortfall for couples on their Social Security income. So I can totally get people being concerned that, hey, I might not have enough in retirement to complement my Social Security to live. And I don't want to go too dark on this show, but I saw some articles. There was a video regarding what's going on in Japan right now for their aging population. And I won't go over it. Just Google it, take a look at it, and it'll just stress the need for long term care and just having your affairs ready and in place as you get into your 50s, 60s, 70s, and beyond. Um, let's keep on going on this article. I had some more bullet points to talk about. A bigger 401k balance does not eliminate the fear of people having of running out of their money. A guaranteed paycheck you can never outlive does. So paychecks and playchecks. This is not just a philosophy; it's now validated by the math and science at the highest levels of institutional finance. So you see a lot of people that had a stigma regarding annuities. You know, they had their retirement, and I'm helping out a handful of people regarding rollovers right now on products, and you know, their big concern as well was making sure they don't outlive their income. And a lot of times there's products out there that you can roll over into that are probably better and can help you have a lifetime income to where you don't have to stress about it, like what we're seeing in this segment of the show in the stats. And if you got questions on that, that's going to be under Palmetto Life Group, our agency there, on where you're on track for your Social Security and how can you create a lifetime income if there's, God forbid, some disruptions coming up. The phone number for Palmetto Life Group is 877-357-5316, or you can go to palmettolifegroup.com. So we'll wrap up this one article. Annuities, whole life with income riders, and structured lifetime income benefits. These are all mechanisms that deliver guaranteed income that can complement a retirement. For business owners, this research also has implications for employee benefit design. Plans that include a lifetime benefit option or income option, and how those options retain talent and improve retirement readiness. So I think we're going to see a shift. We got AI, we got all kinds of stuff going on the planet. And I think we're going to see a shift on people saying, hey, I want to make sure I've got a guaranteed income. Okay. Especially with all the scare of AI taking jobs away or just disrupting everything, so to speak. You know, I think there's going to be a lot of good that can come out of it, but there's going to be some disruptions as well. And a guaranteed income could be something that is going to become a reality or that you're going to want to prepare for yourself, a loved one, or family members. And back to this article wrapping up, they've been preaching for decades. Now the biggest financial institution on the planet is doing it with 100,000 data points. Listen to the math. So the fact that BlackRock, the world's largest asset manager, ran 100,000 simulations on if guaranteed income is going to be the future, and it looks like it will be. So we'd love to help you take a look at some loose solutions off of that when you have a moment. Again, you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. Just talked about some segments outside of health insurance, basically retirement and Social Security or lifetime income. That is a sobering article that we just brought up. But if you need help regarding health insurance, individual health insurance, Medicare plans for seniors, employee benefits for your valued employees, give us a call at 210-880-5316. That's our Texas State Insurance line number. Or you can visit us online at txstateinsurance.com. Now, Palmetto Life Group, remember, handles life insurance, long-term care assistance. We've got Social Security analysis as it relates to retirement, as well as auto, home, and commercial lines. That number is 877-357-5316, or you can visit us at palmettolifegroup.com. So, another segment that I wanted to bring up on the show was insurance literacy, level funded versus fully insured group plans. And if you don't know, there's different ways that you can offer affordable health insurance through your company. And level funded came out a handful of years ago, and we've done a lot of business regarding level funded plans. But at the same time, we've got a lot of clients that are on fully insured. So we just wanted to break this down for you, and that's what I wanted to talk about for a quick minute. So, what's important is the distinctions between level funded and fully insured. Fully insured is the traditional health insurance route when you talk about insurance needs, specifically for health insurance. It's a fixed monthly premium. It's regardless, and that premium is regardless of the group's actual claims. So it's not like claims data or a shock claim can disrupt what that cost is for that group. Insurance company bears all the risk. Simple and predictable premiums are what you can see from that. Now, simple and predictable might not be affordable, but you pay a premium for that certainty, and there's a reason why you pay a little bit more for that is because you know it's going to do exactly what you expect it to do, and you'll know more than likely how it's going to play out with an increase the following year. Okay. So fully insured, fixed monthly premiums regardless of group's actual claims. They basically take everybody's ages and average it out, and then it spits out a premium that you will subsidize for your employees, and you'll subsidize, or the employee will pay the difference off of that coverage. Level funded is a hybrid option. So you still pay a monthly amount. Okay, you still have a premium that would need to be is obligated for that level funded health insurance plan, but the payment is split into three buckets. Okay, and this is pretty cool because it's helped out a lot of our clients until somebody gets sick or there's a shock claim. That's where the solution might not work out anymore. But the three buckets are a claims fund where all of your anticipated claims will get deducted from, your administrative cost of offering the plan, that's baked in there, and then there's stop loss protection. Okay, that's your safety net. So even on level funded, if you go out of the claims fund bucket, so to speak, you've got a stop loss there that's going to help protect any extra exposure that you might have. Now, remember, this is level funded. What I spoke to a minute ago was fully insured. It's not self-insured plans. That's a whole nother topic that we'll bring on another show. But fully insured and level funded are been the main options that we've seen to assist our small business benefits clients with affordable options. Quite recently, we've been doing that quite a bit right now. If claims come lower than expected on the level funded plan, remember you got those buckets with its money allocated to or cash from the plan. You may be able to get some of that money back, and those are nice conversations that we have with our clients. Like, hey, good news, you had a good renewal. They're going to go up 3%, or 8% or whatever. You're going to have an increase. Everybody got older this year or 1 year older collectively, and there's going to be some medical inflation there. Most of our clients understand that, but sometimes when that plan is really tracking well, they've got a surplus of cash that they can either take back and provide back to the employees, or maybe apply to the premium for the renewal coming up. So you can get creative with that, and that is always fun and nice, or that doesn't happen as often as it used to be able to provide our clients good news regarding getting money back. If the claims, however, are higher than expected, that stop loss insurance caps your exposure, and you probably, used up all that extra cash that was in that claims fund that you could have gotten refunded out to you. The critical question regarding fully insured and level funded plans is basically just don't ask what the monthly premium is. That's important. I get it. But you want to ask if you're overpaying for the risk that you have with the group. And if you got a healthy group of individuals that are employed by you, then there's a chance that we could help you with a more aggressive, more affordable option, not just for the company, but for the valued employees as well. These healthy groups are going to have low claims histories. So that is something that the carrier is going to put in perspective and say, hey, listen, we're going to reward you for that. A lot of that's out of our control, obviously, if a health situation comes up. But if you've got that good track record, it's going to create a significantly lower cost as we're facing, increases in health coverage. One of the caveats that I'll wrap up regarding level funded and fully insured is underwriting is required on the level funded options. So, not every group qualifies, claims data matters. That's why working with a knowledgeable agent and not just an online portal is essential. Let's talk about this wrap up that I had on this particular segment. You know, a lot of times, um, agent brokers will be quoting or trying to help out the same company. The company thinks, hey, the broker I choose, it's going to be based on cost. Well, in reality, all good agents and brokers out there that are helping you size up and shop your health insurance hopefully are using the same correct information. Okay. And this is why this is important. Because if you give one census and details of your employees, whether it be who's full time, who's not part time, what their ages are, which dependents might be on the plan, if that's not accurate for one, I'm sorry, for both agents and brokers that you might be shopping with or multiple, then it's not going to be accurate at all. You're gonna really create a problem if that data is incorrect for one broker and for another. I'll give you a perfect example. I lost a group that I was working really hard to earn their business with. They were with an existing brokerage here in San Antonio, and they they weren't very happy. So we were trying to help them out, look at options, and we came up with a solution with a particular carrier that was going to work, and it looked good and attractive. And, then they said, "No, we've got this other company that's gonna help us get enrolled in that plan. Same thing that you offered, but, they're gonna allow us to have everybody on the plan, and it's gonna meet these guidelines for this cost." I was like, "Man, that's incredible." Um, I hope they used the same census details that were accurate. Sure enough, they did not, and they ended up coming back to the client or my potential client saying, "Oh, by the way, the census wasn't accurate. This is going to be the cost." They had already made the changes collectively. To go to the other carrier, and it disrupted quite a bit, not just for the company, but for the employees. They had to double check plan design. They had to change the plan offering that they were going to offer just because it wasn't going to be affordable on the design that they'd put together. It's critical that you have the correct information. And I totally understand why employers out there want to get multiple quotes and have multiple people shop it. We've got some clients that give us limited information or don't even want to show us their renewals because they feel that we're going to try to just get the price just low enough to try to earn the business. That's not how this works. We want as much information as possible so we can justify or the carrier can justify the reason to offer you more affordable rates. And that's going to be based on underwriting. It's going to be based on an accurate census. That's going to be based on knowing, what you have in place and what you're spending now. So, although I get it, and people want to, our future clients and potential clients right now want to have the best price. I totally understand, but we need as much information as possible to be able to help you get those costs down lower. So that brings up or wraps up the article on level funded and fully insured. I am running out of time a little bit. Something that I wanted to bring up that I thought was important was a quick segment on Social Security insurance versus Social Security disability insurance. Okay, I'm sorry, Social Security income and Social Security disability insurance. It basically it's SSI versus SSDI. Okay. And those acronyms are interchangeable all the time. And the fundamental difference between the programs and the different rules and the eligibility pass and the benefits are something that I thought we could bring up here for a quick moment. Somebody could be listening to us online. This could be a short video clip that I'm putting out online regarding SSI and SSDI, or you could be listening to the show on the radio. But let's dive into this. SSDI, Social Security Disability Insurance, is based on your personal work history and Social Security taxes paid in, or credits, work credits. That's how they basically calculate what you've earned collectively to be offered the benefit. Benefit amount is tied to your earnings record. It can be higher for workers with stronger histories, so it could also be lower. After 24 months of SSDI, you become eligible for Medicare. So you basically got a waiting period of 24 months, and once you hit that period, and sometimes they can retroactive that I've seen as well, you'll be eligible for Medicare, and it might be good to get a Medicare insurance plan to complement that as well that we help out clients for. Not always, but a lot of the time. SSI is the supplemental security income. This is based on a financial need. Income and asset limits apply strictly, generally $2,000 individually and $3,000 in a couple in countable assets. So you basically need to be cleaned out, liquidated to be able to qualify for a supplemental security income. This is typically available for disabled individuals, regardless of their work history, and including those that have never worked. So, if you've never worked or can't work, and your assets are within 2 to 3,000, depending on if you're an individual or a couple, that's when you can get a supplemental security income to help you. Often provides a pathway to Medicaid coverage, and that's going to be depending on the state. So Medicaid was not expanded in the state of Texas for adults. Typically, the only way you're going to see somebody get Medicaid is going to be through you're a pregnant woman, you're an elderly adult, or you're a child. And your parents are at that threshold, and the children get qualified for that. What I want to talk about to wrap this up is your key planning points on SSI versus SSDI. You can apply for both simultaneously. A lot of people don't realize that. In some cases, one acts as a backup to the other. And again, this is a case by case basis that you're going to want to deal with the Social Security office on. Asset limits for SSI mean planning ahead matters. Certain assets do not count, which is your primary home, one vehicle, life insurance, CSV under limits. So that's the cash value of the policy. They have specific limits that those can be at or a threshold. Understanding these programs before you need them can dramatically affect the quality of your planning and outcomes. So if you're interested in getting more information on SSI and SSDI, reach out to us at our Texas State Insurance Services Division or Palmetto Life Group, and we'll get you some details and some local contacts. You might already be handling that right now for yourself or for a loved one, but at the same time, if you need some guidance and some tools, we're here to help you get that lined up. If you are a family member, has a disability and you interact with an insurance or retirement plan, we'll walk you through it. Okay, we'll try to create a game plan on how that relates to your Social Security, or your retirement, the current health insurance you have in place. Excuse me. That's why it's important, I think, to deal with a broker that's well versed and has the channel partnerships and the tools to be able to look at individual health insurance, Medicare plans for seniors, individual coverage that's outside of health insurance, group employee benefits, whether it's a small, medium, or large size business. We are Social Security, registered Social Security analysts with Palmetto Life Group specifically. so we can help you when it comes and relates to Social Security. So just know we are doing our best to make sure we are prepared to help you out with multiple situations. If we don't have an answer, we'll work really hard to get you that answer or find out who can help you in the future. But just to wrap up, you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland. Talked about quite a few articles and items throughout the show, different segments that I put together. I'm running out of time, so I wasn't able to talk about everything I wanted to on the show. But we're going to bring up more articles next week. I think we might have even a guest next week, and hope everybody's doing well. Again, if you need help with individual health insurance, Medicare plans, employee benefits, reach out to us at Texas State Insurance Services, 210-880-5316, or Palmetto Life Group for life, long-term care planning, Social Security analysis, auto, home, and commercial lines of business, 877-357-5316, or palmettolifegroup.com. Hope everyone has a great weekend. Thank you for listening to us online or listening to us or watching us over on the YouTube channel. Talk to you soon, everybody.